If you look at the macro environment, it has been incredibly negative for gold. It's been tracking the dollar very closely. At one point, it was tracking the CNY very closely. But we're now in a period where we should see fundamentals becoming much more supportive as well. When we saw that price dip in August, demand from China and India was very strong and provided a much better floor for prices.
Yeah, and the one thing that we probably didn't talk enough about, because I think it happened on a day where we had like two other big deals, was Barrick buying Randgold of South Africa, and they got buried in the headlines. But some of the biggest gold producers in the world buying each other, I assume they want to take supply off the market.
So in one respect, that's increased the interest in gold. Many more market participants, investors are looking at gold that may not have looked at it since the start of the year when we were looking at gold because it might be a good inflation hedge again. And then commodity space was becoming much more excited about the whole complex. But what we look at here is, like, in terms of cost of production, for most producers, they're still making money, and only 15% of the cost curve has become loss-making with prices at below 1,200.
Yeah, because kind of like we talked about with oil, the producers have gotten their cost per barrel way down. How much have gold miners been able to get their costs per ton and per ounce down?
Just a few years ago, costs were continuing to rise, but they have benefited from the currency movements. They've benefited from lower oil prices, which of course have edged higher now. So if we look at the cost curve, all-in sustaining cost of capital is actually around $940 per ounce, which is considerably lower than where we are. But the 90th percentile, much closer to 1,300. So prices. That margin has actually started to widen, but now it will start to come under pressure again.
It's not just gold. I know it's not as sexy, but silver is actually down more than gold is this year. I know it doesn't get as much attention. In fact, all the precious metals are really down. That's your industry. What's going on generally with all the precious metals, Suki?
The global trade tensions have obviously weighed across the more industrially biased precious metals and the metals complex as a whole. But we need to look at the individual fundamentals. If we're looking at palladium, for instance, its fundamentals are still very robust, and we expect the most upside risk to materialize from palladium.
That's an auto play, correct?
It is
because
indeed.
It goes into the catalytic converter of the car. So a lot of cars that are manufactured, palladium demand goes up. But shouldn't precious metals benefit from trade tensions? We've always been told, oh, when things are scary, buy gold. And there's all this trade stuff going on. Like, I'm surprised more people aren't buying gold because they're afraid of what's going to happen,
Right. If we look at the risks, there's a raft of risks that should have pushed gold prices higher. Safe haven demand should have been much stronger. But these risks haven't been almost systemic risk that's made investors concerned about global growth. So although the risks are there, we've seen more localized buying in, say, Germany and Austria, rather than global demand that tends to push gold prices higher when we see broad investment demand supporting prices.